Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, a Chartered Market Technician and Portfolio Manager. Happy 4th of July here as we hit your email inbox on this important holiday. So if you are watching today, an extra thank you. If not, if you're catching up on the 5th or whenever, just appreciate a chance to just go over a couple of things with you. We're going to look today at the labor market and what that might mean. I think we might be at an inflection point as well as other several premier economists kind of pointing to some changes there. We'll go over that and then look back at the second quarter. And Andrew will deep dive into really what worked, what didn't in the second quarter as we wrap that up. So we'll dive right into the labor market. So here, July 5th, we will get the next monthly non-farm payroll that's released each month that tells us how many jobs were added to the economy and what the unemployment rate is. And what we have seen over the last several years is a really strong, really healthy labor market. In fact, for much of that time, probably stronger or healthier than was even reported here, but we're very well likely could be at an inflection point. And I say that because of how the Bureau of Labor Statistics comes up with these figures. So it's very difficult to aggregate and know just precisely at any month how many jobs were added. They've got to use a lot of models, take what data they do have, and come up with a number that is often revised back as they can actually reconcile real data. So it's a complicated process. But one of the factors, one of the key concepts that feeds into this is the fact that by and large, small businesses employ many more people than large businesses. And that can trip some people up because we typically think about a small business not employing a lot of people. But there are so many small businesses when you aggregate them, they are far more important to the labor force. And the challenge with sampling and surveys then is we don't get as much good, clean data from small businesses. So they have to do a lot of guesses and a lot of guesswork for how many new businesses have emerged during a given month or how many closed. And that ratio will then feed their models. And as we can see here, I'm looking at two lines on this chart. The gold is the birth-death model. So that's the birth-death of businesses that will be used, and the number of jobs that they say are attributed to this dynamic, which over the past 4 quarters, we have reached well over $1 million. And a big reason for that was we saw a big surge after COVID of new small businesses. That was one of the great things that led to a lot of productivity, and it added to a lot of jobs. But that has slowed dramatically as we move to the end of 2023. You can't necessarily keep that pace up forever. But the Bureau of Labor Statistics is relying kind of on the unadjusted data, or not really built in the fact that we have seen a slowing in the number of new business. So all that means there's very likely to be some revisions in the total number of jobs. Maybe not anything dramatic, maybe not anything to materially move the unemployment rate, but likely enough to move the discussion. And that is so important because the Fed has 2 prior mandates. They have inflation and they have employment. And so for the past couple of years, they've had a very clear look through. They have had a solid employment report and problematic inflation. That has made their job very one-sided, very one-focused. If this does indeed change, they've got more of a two-sided coin. They still have a challenge with inflation, but if they've got a labor market that's teetering, they will start to incorporate that more often. And so on the margin here, I believe this is a more optimistic or more bullish for short-term bonds and things tied to interest rates. We'll see how this plays out and the size of the adjustments, but just laying the groundwork there, some shift in our thinking economically that does line up with an economy that is very clearly softening, at least just a little bit. So that's some economic stuff for you. Andrew, we'll turn it to you and to review the second quarter.
Thank you, Adam. So as we close the book on June, we also close the book on the second quarter. And so we want to evaluate what type of market strategies, what type of way of looking at stocks was benefited and what ones maybe just didn't had a pretty rough quarter. And so there's a lot of numbers on your screen. I'm going to boil it down. It's going to be very easy, so do not worry. What we're looking at here is the Russell 1000. We often talk about the S&P 500, the 500 largest companies. The Russell 1000 is just another more broad way of looking at large cap stocks. And we take all those 1,000 stocks and put them in 100 stock groupings and then evaluate them on different ways to look at stocks, whether it's based off just their price. Is it a low price stock or a high price stock? Based off their market cap. We often talk about in the market carver how mega caps have done really well. And then looking at some fundamental characteristics, price to earnings ratio, price to sales, price to book, on down to the very bottom. How did they do in Q1? Do the stocks that did really well in the first quarter do really well in the second quarter? And what you'll see is there's quite a bit of red, and then there's a little bit of white on your screen. And you'll notice on the far right side, there's one solo green box. And that's why I wanted to bring this chart to you, because it's very unique, pretty interesting, at least to us on the allocation team. And what this shows is really the only strategy of slicing up the market that was rewarded was something we've talked, again, a lot about on this market carver, and we talk a lot about in the allocation meeting, has been mega cap stocks. So if we look at that market cap that market cap row from lowest to highest, we can see the performance of the largest 1,000 companies, and those smallest of the large cap actually were down almost 10% in the quarter. Whereas we look all the way to the right side, it was up 0.76% in the quarter, which is still very small, realizing that the market itself was up roughly four and change. So even the largest stocks, the largest 100, still were unable to keep up with the broad market. Then if we start looking at all the other ways to look at stocks, most of them were not rewarded, whether it was from a fundamental lens, price to sales, price to book, on down to even looking at momentum, more of a technical gauge that I look at. Looking at performance from the Q1, that we did see that the best performing stocks still had the strongest performance in the second quarter, but still didn't hold a match up to just looking purely at market cap, just looking at how big were these companies, seems to be really the only factor or way of evaluating the market that actually was able to be fruitful. So it's very interesting. It's very rare. We don't typically see it like this, to see only one of these boxes be green. And so we're going to continue to monitor this, continue to watch to see how these different evaluation techniques work and going into Q3, and does the market continue on the same type of pattern, or do we start seeing some of those valuation metrics begin to bear some fruit in this next quarter?
Yeah, very, very well put. And, we've seen several of these instances here, quarter there over the past few years. And this one really stood out, that divergence, just the sheer dynamic of even the same universe of Russell 1000 being that spread apart. Truly unique and truly challenging for really building diversified portfolios. You can't put your assets into one small of those corners. You got to have a variety there for a balanced diet. So thank you, Andrew, as always. Thank you to all of you. And as always, we'll give you a reminder, if we can be of service, please give us a call, 800-928-4001, or scan the QR code and book it electronically. So once again, happy 4th of July and have a great weekend.